Now, with the trade war between America and China, hearing about ructions late today in our stock markets and also in the Hang Seng in Hong Kong. Well, today, China's latest economic growth numbers were released. The GDP grew 5.4% in the year to the March quarter, better than forecasts of 5.2%. Retail sales and industrial growth stronger than expected at 5.2% for that year. But that might be a bit short-lived with that tariff war raging.
The ball is in China's court. China needs to make a deal with us. We don't have to make a deal with them.
Yeah, there's more pressure building on China. Reports suggest around 280 Chinese companies listed on the American stock exchanges could be delisted by the Securities Exchange Commission for failing to comply with global accounting laws, which are known as the Generally Accepted Accounting Principles, or the GAAP. The Trump administration this week appointed Paul Atkins as the next chair of the Securities Exchange Commission. And this was picked up by American investor, one of the sharks on the US program Shark Tank, Kevin O'Leary, on Fox Business earlier this week.
Atkins was approved, his nomination went through for head of the SEC. Then Senator Scott issued a letter, made it public yesterday, that he had asked this person to enforce the law about delisting Chinese companies that were not compliant with GAAP. They were given 3 years, then the law was modified to give them 2 years. None of them were compliant. There's billions of dollars trading this morning that I think Chinese companies that are not compliant, they're going to get delisted.
So let's now go to the trade war today and see just exactly how that goes with Brock Silvers in Hong Kong. Brock, many thanks for your time as always. I just want to take to exactly what happens here next, because clearly we can see the markets, there are ructions there, there's more pressure mounting. What's your own sense on what takes place next?
Well, it's highly uncertain. Look, far be it for me to disagree with Kevin O'Leary. I think he's mostly right, but that doesn't mean that he'll be right today or tomorrow. But I do think we're heading in that direction, and he's clearly pointed it out.
So then go to where markets go, because, again, you've got relatively strong economic growth in China. China's got to find alternative places to trade and alternative allies. Quite clearly, the United States is trying to amp up the pressure on China right now. So I'm just wondering, if you're on the ground in China now with a business, what do you do? What's the strategy for those businesses?
Well, I joined the market's general reaction, which was very nonplussed to today's GDP numbers. I think that's quite misleading. Not only was there some undeniable tariff front running, but in general, the statistics are just, how can I say, highly unreliable at this point. There should be an observable correlation between the need for good news and the presence of good news. What I would say, though, is that on the ground, there's very little optimism short term about Chinese markets. I think that the U.S. tariff stance will start to bite, and as time goes on, that bite should become harder and harder to bear.
Can I just go to the politics of this? Donald Trump's there for 4 years, and you don't quite know what will happen after his sort of presidency in regards to tariffs. Xi Jinping is there for the very long term and therefore is prepared to try and sweat out these tariffs in some ways. Is there a point at which China has to blink, though, because of the harm, the costs that might be being incurred in terms of the Chinese population?
Yeah, look, I think it will be very difficult to wait Trump out for a full 4 years. To use an old Chinese saying, heaven is high and the end of 4 years is far away. Look, I don't think that Xi Jinping can just wait this out. I think there are problems in the Chinese economy that are going to have to be dealt with. Not only is there real solvency issues across a number of key sectors, but we also see just sort of lower growth despite the claims of 5.4%. And you have other correlated problems, such as only a small percentage of college grads actually find suitable jobs right now. So China's going to need a solution, and they're going to need one before 4 years is up. Whereas I think on the other side, the U.S. may be hit with some immediate term pricing pressures, but over the intermediate term, I think the U.S. will do just fine.
Okay, so then explain to me what you get the sense that Donald Trump wants. What's the end game when they suddenly get to the negotiating table? They're trying to put some sort of a deal together. What do you get the sense that China has to give to Donald Trump in order to be able to get a new deal through?
Well, the short answer is not much that they're willing to give. So it's not really what does Donald Trump needs, but where do I see the obvious deal to be made? It's hard to picture at this point. The U.S. has two main concerns. One, you can't just run massive budget and trade deficits ad infinitum. At some point, that has to end. But you also have a situation where the U.S. finds itself suddenly not making sufficient amounts of steel, ships, chips, antibiotics. None of that can be acceptable from a political perspective either. So both of those things are going to have to change. I think the U.S. will find easy accommodation with most of the world, but the issue with China, I think, is going to be quite knotty.
So very quickly, do you sense that the volatility has gone out of markets?
No, I think volatility will be here with us for some time yet. And my own portfolio may have taken a hit, but I think we'll ride that wave and recover most of that loss.
Brock Silvers from Kaiyuan Capital in Hong Kong. Always good to chat to you, Brock. Many thanks for your time today.
Thank you.